Welcome to Investors Insights. Our topic today is trade storms. There's a reason we chose that topic. Right now, trade wars, trade storms, a lot's going on. So let's address that as we were talking here. It's the main topic.
Yeah.
Talk about China, tariffs. Got a lot of questions about that.
Yeah, so let's talk about some facts first. So first, we imported $539 billion from China last year in 2018. We exported $120 billion. So 539 came in, we sent $120 billion. So a couple points here. The U.S. has a lot more to put tariffs on than China does. We could go a long time. And then also the Chinese economy is hurting, ours is strong.
Right.
So, we're looking at different research. We analyze a lot of stuff when it comes to the trade wars and all this thing. But Oxford Economics Research has some scenarios that we like. So I want to talk about these three primary scenarios that could play out here. One is scenario one. China feels the pain. Our current administration thinks about the 2020 election, and a deal is eventually made over the next few months.
Right.
Scenario two is what's happening now. U.S. did tariffs last week. China did tariffs this morning. So tariffs of 25% are lobbied between the countries. What will happen economically? We'll see a 0.5% hit to U.S. GDP, 1.3% hit to China GDP, which is already starting to, we'll see pain there, and then a 0.5% hit to world GDP. So that's what's happening now. If this continues, 2020, that's the impact on GDP. Now, scenario three. This is the extreme scenario. So 35% tariffs, 25% auto tariffs. We'll see a 2.1% hit to GDP in our country, causing a recession in 2020. The 2.5% hit to China GDP, causing a pretty deep recession for them.
Right.
And then a 1.7% hit to world GDP. Now, this is a lot of noise. We'll see what plays out here. But for us here in the U.S., we need to focus on our economy. We'll get some numbers this week. So on Wednesday, we'll see retail sales. Friday, we'll see consumer confidence. We need those to be good to outweigh all the negatives around the trade talk.
Well, and that's a great point. And from a historical standpoint, as you study, our foreign negotiations, the difference is it's now public.
Yes.
The media is really highlighting these things. And so usually as you approach an election, that's where if we have foreign governments that aren't happy with who they're dealing with, you can see them try and impact our economy in some form or fashion. Now the public knows exactly what's going on, or at least has a better idea. So we all need to keep that in mind as we go through this on the 2020 election. The closer we get to that, the more these type of topics may escalate. And then you were also adding to that this morning, Adam. Talk about that.
So yeah, recently, they just said that they're going to put $60 billion, China's going to put $60 billion on U.S. goods, on tariffs, starting June 1st. We look at this as, are they kind of buying time? Are they helping themselves, trying to figure out a strategy to come back? Because as you said, Bobby, the U.S. economy is still very, very strong. We're seeing a lot of good data. And it's going to be really important over the next couple of weeks to look at business confidence, see how the consumer reacts to this data, to see, are they going to be scared off, or are the consumer going to keep strong? Are we going to see jobs numbers continue to grow and GDP going up? So internally, our economy looks really strong.
Very much so.
Yeah, so we still think we're in the driver's seat right here. It's going to be until June 1st to see if anything kind of plays out until then, but that's what we're waiting around to see.
Well, and then you brought up storms. I want to talk about just the weather, because here we are and we've got these trade storms going on, but the weather itself is maybe a factor. Talk about that.
Yeah, so we're in the longest 12-month stretch of rain we've ever had on U.S. record.
So in terms of these 12 months, though, that weather can slow up construction.
Exactly.
It can slow up people taking trips, the consumer spending money, doing those home improvements. So we're going to be watching that.
Yeah, we looked at jobs growth. Like you're saying, construction was a big lag. I mean, if this rain starts to go away, of course we can't control that. But if it does, construction numbers are going to go up.
Sure. So on that note, we hope you have a great week. We hope you have plenty of sunshine, although we need some rain every now and then. And then also know that we're watching all these indicators, and as the China-U.S. Trade storms continue to go back and forth, we're going to keep you updated as well as the impact it can have on your portfolio. Thanks again for sharing this vlog with others. We appreciate it so much. Have a great week.